Hi, this is Robert Clickybeard and David Anderson with the Commercial Landscaper podcast. We're going to take 20 minutes of your life to deliver some amazing business content from accomplished leaders to bring you value, to scale your business, and to better yourself personally. And really hopefully you enjoyed. Cheers, everyone. Hi, this is Robert Clickybeard with the Commercial Landscape podcast. I am delighted to have Brian Corbett on the call today. Brian, I've known Brian for probably 6 or 7 years. Good friend, helped me with the exit of my company. So we've had a lot of dialogue over the years. So welcome, Brian, for joining me today.
Yeah, no, thanks, Robert. Great to be with you. Appreciate you having me.
So Brian, tell me a little bit about you, your background, first of all, and then we'll jump into a little bit more about your company.
Yeah, no, sounds great. So Brian Corbett, I'm the managing partner of CCG Advisors. We're based in Atlanta, Georgia. My background, I've had the company for 24 years. The handful of years of my professional career prior to that, I was in the commercial lending business, lending money to closely held businesses and figuring out their credit worthiness. And then I was in the fee-based financial planning business where I was dealing with older business owners who, as I would say, had run, most of the race. And they were starting to deal with issues like business succession and estate tax planning and things like that. And that transitioned me into mergers and acquisitions. So not really a typical path, but my clients were getting older, their businesses were getting bigger. Many times their kids either weren't in the business or couldn't run the business. And so we started talking about exit strategies and sales. And one of my clients asked me to help him sell his company. And I said, Ray, I'm a 20-year-old life insurance agent. Are you sure you want me to do that? And he said, yep. He said, I like you and I trust you. And, we sold this company for a bunch. Never looked back. So been dealing with business owners my entire career. And the last 24 years of that has been with our current company.
That's awesome. And I know you're known as one of the leading I suppose advisors within the landscape, the green industry. What sort of got you into working with more landscape companies and related companies?
Yeah, so really interesting. So that very first company that I sold, that's got to go back to 95, I think. It was a roll-up, was the buyer, and that roll-up was put together by a group out of Houston, Texas called Notre Capital. Well, most people don't remember that name, but Notre Capital actually are the same guys that started Landcare.
Oh, wow. And
so 2 years after I started doing deals, along comes this buyer that I knew very well and said, hey, we're going to do the same thing in commercial landscape. And we had some old financial planning clients in Atlanta and a couple other cities that were in commercial landscape. So we were literally there from ground zero.
Oh, that's great. That's nice to see the industry. How have you seen the industry evolve over those years? I mean, that's obviously a huge question, but you've obviously seen a lot of changes. There's been a huge amount of activity over the last, 7-10 years, maybe more. How have you seen things evolve?
Yeah, so it was interesting. So, just kind of taking it in snippets, the first series of activity was that period 1998 to 2000 where, Landcare and TruGreen at that point was still part of ServiceMaster, which was publicly traded. Those were the most active buyers for those first couple of years. Obviously, Valley Crest existed, Brickman existed, but they didn't buy a whole lot of businesses in that first couple of years. Then TruGreen finally bought out Landcare, right? And then Brickman did start to buy again. Valley Crest started to buy more. So we really kind of had, Coke, Pepsi, and Sprite back in the day. There were just a couple of flavors. It was 2013 that KKR acquired Brickman. 2014, they got MSD to merge in Valley Crest. And literally, to me, that was Pepsi buying Coke. And I kind of thought that the gig was up. It's like, okay, Landcare's gone. TruGreen had really kind of screwed things up. Now Brickman and Valley Crest are together. But that really, that 2014, now you're right, it's been 7 or 8 years, amazingly. And now there's just been this explosion of private equity groups. So the big transition was 1 or 2 buyers back in the day, then 2 or 3 strategic buyers. And now, Robert, there are over 30 private equity groups invested in commercial landscape.
Wow. I can't believe that. Why the big attraction? Why is suddenly private equity looking at our space?
Yeah, so I mean, a little bit private equity can be somewhat like sheep, right? So it's like, gosh, all these other guys are over there. Maybe I should take a look at it. KKR was kind of a bellwether name. I mean, you're talking about one of the top 10 private equity groups in the world, spent, I think, 1.6 billion to buy Brickman. Then they got, MSD, which is Michael Dell's private equity group, who was a controlling shareholder, Valleycrest, to roll in. So now somebody's got a couple $1 billion invested. And I think the idea becomes, okay, well, that's a national company that creates an opportunity for private equity groups to build some kind of local or regional platform with the assumption of, okay, if we get it to scale, then a Brightview would buy us. And that has happened some, but I would say more. We continue to see more and more equity coming in. It's a great business model, right? It's a B2C play, B2B play, business to business play. It's got a high level of recurring revenue with the base contractual maintenance. Then, as you well know, right, you have all those incredibly profitable enhancement sales and snow sales in certain markets. So, generally they like the business to business service model. They like the high amount of recurring revenue. There are capital expenditures required to grow the fleet in the firm, but it's not a huge percent, of the revenue compared to some other businesses. So it has a lot of characteristics that are kind of, right down the fairway for private equity investors.
No, that's awesome. Yeah, I mean, I could go so many different directions from there. I mean, I suppose in one sense you have, private equity must be coming in. They must be concerned about some of the trends going on with labor right now. So they probably have a little bit of hesitation, but at the same time, though, you probably have a lot of owners now saying, I'm so done with all the labor challenges, wages going up, all the other cost increases. I want to transition out of the business. Are you seeing that type of those questions or concerns come up?
Yeah. So if you think about that, the supply would be the business owners in the green industry willing to sell. The demand would be the investors or private equity groups looking to put money in. I mean, I think we're at an all-time high on both, because if you think about it, a lot of the businesses that we've been selling and that we are selling are guys who've been in the business 20 years, 30 years, 40 years. They're getting older. The businesses are getting bigger. Certainly whether it's, wage and hour stuff in California, labor costs, as you mentioned, everywhere, environmental things, trying to outlaw gas powered equipment. It's just, there are certainly a lot of headwinds, but I think most of our clients have taken that in stride. I think the buyers are, they're taking a stride. They're certainly paying attention. Okay, when you're going to renew your contracts, hopefully you're going in for some pretty juicy price increases. Most of our clients are and seem to be getting them. So, I don't think that we've seen a tightening on either supply or demand. I think people recognize on the seller side, it's an incredibly frothy, active market. The valuations are as high as they've ever been in the 24 years that we've been working in the space, and there's no shortage of capital looking to get in. So yeah, we had the most active landscape M&A year we've ever had last year, and I think we can do better this year.
Well, interesting. Now, when obviously the word gets out the street about some of the highest multiples out there, and your phone's probably ringing off the hook. What are some of the initial things you see in terms of whether a company's ready to sell, how much preparation they need to do? You come across companies that are just complicated. I mean, what are some of the things you see out there?
Yeah, I mean, we tried, obviously, so many times we've had a long-standing relationship with the owner, or they know us and we know of them because we've been around so long. We try to give them advice that they should be talking to us, probably 2 or 3 years before they really either A, want to pull the trigger, or B, potentially be done, right? Because there's always going to be some period of time that you're going to stay after closing. And so when we come in, Robert, I would tell you that, we're trying to focus on the bigger, better, more profitable players, right? Because those are going to be the most attractive to the buyers. But I will tell you that probably the single biggest thing that we find companies have not done a great job with is really professionalizing the back of the house, specifically the financials. And so many times our clients have grown and grown and grown. And next thing you know, the controller or the CFO that's in there really probably isn't the best person to be in that seat. They may either not be having, don't have a real close relationship with their accounting firm, or maybe they've outgrown that accounting firm. So when we come in, when we see that they can't get us data quickly, that the numbers don't always, tie out as well as they should, that's an area where, they probably need to spend some time and money. And one thing that we'll do a lot of times now is we'll bring in another accounting firm that's not theirs, that specializes in what's known as a quality of earnings review, or a Q of E. And a Q of E is exactly what the buyers will do, especially the private equity guys, to come in and make sure that the revenue is the revenue, the EBITDA is the EBITDA, that all those revenues and costs and expenses are matched, and that they were all recorded in the right period. And it's kind of like a good housekeeping seal of approval. And so once in a while, we'll find a company that has rock star CFO, rock star financials, and we don't have to do that. I will tell you that's more the exception than the rule.
Okay.
Getting their financials in order and maybe having somebody outside those who've been preparing them, kind of do a thorough, Q of E, very, very helpful. Money.
Right. No, and I've seen that a bunch of times where, there's a certain degree of loyalty. Somebody's been with a company for 10, 20 years and they want to keep them around, but in actual fact, they're not doing the best service for the company, but they just don't want to part ways with them. So I think having some type of an outsource solution to come up with that correct information is super helpful.
Yep.
What other things do you see out there in terms of companies preparing for an exit, whether it be a year, a couple of years in advance?
Yeah. So, obviously looking at the team is really important. So, subject to what the owner's goals are. We have some clients that, they want to sell and move on as quick as they can. We have other clients that want to say, gosh, I've taken it this far, but if I had some additional, strategic, help and had some additional capital, I might want to take my business to the next level, which is, a really good fit for private equity. It's kind of bringing in a financial partner. So looking at the team is really important. Some of these companies are pretty flat, right? I mean, you have a very, high profile owner that may not be as involved in the day-to-day operations and making sure the crews roll, but is incredibly influential on the big sales, the big bids, some of the biggest customer relationships. So, identifying and hopefully having people in place that run big parts of the business. It's helpful to us when there is a real organization, and whether it's a president, a general manager, a branch structure with account managers, to where we can say to the buyer, hey, Mr. Big's the owner, but Mr. Big doesn't do anything. He doesn't do everything anymore, right? He's got a team in place. That really breeds confidence into the buyers, and probably broadens the options of folks that we can take it to.
Okay, cool. And how about the owners themselves? I mean, is there some expectation that they're going to have like a year, 2 year, 3 year type of employment contract to bring some stability to some of those contracts? What do you see out there?
Yeah, I mean, it's a little bit all over the board. I mean, I have done deals, a couple deals recently where we closed and the owner literally walked out the door, and that was had great teams and systems in place. And those people were obviously also brought into the sale process, because a buyer's not going to buy a company, agree to let the owner walk if they haven't met the people that are going to be running the company for them. So sometimes, we may want to bring in some of the key executives, even though I know that can be, it can be a little bit of a challenge. But we've also, if you do a private equity deal, Robert, then typically that private equity firm, especially if you're either the first company, the quote unquote platform, or one of the other early companies coming in, they'll normally want the seller to roll some percentage of the purchase price forward in equity in the new company. Good news is we can normally do that on a tax deferred basis. But then it's like, hey, you're still an owner. And the mindset's probably more, you're going to stick with us for 3 years or 4 years or 5 years. You might help us run around and do acquisitions. So I've seen literally owner walks out the day of closing to owner still there 5 years later with a big ownership stake. So that's part of what we want to understand from the client, is what's their objective. Are they looking to cash and retire? Are they looking to get capital, chips off the table and then grow through a partner? Somewhere in between. So, subject to the seller's goals and which buyer, we're at the table with.
Now, some of the owners who have rolled in another time, what have you seen out there? Has that usually been a successful move for them, successful investment?
Yeah, I mean, there have been a couple of high-profile failures, which we don't have to call anybody out by name. So there have been a couple that haven't worked out. But I would say right now the platforms that are in play are overwhelmingly, doing well. The businesses are growing substantially, revenues increasing, EBITDA's increasing. You're going to see some of these private equity-owned companies coming to market this year for two reasons. One, because they've been in the investments for 4 years or 5 years or 6 years, which is a typical private equity holding period, as they call it. The other is they're institutional investors. They see how high the valuations are. And it's like, even if they're not as far into their growth cycle as they were planning to be, they can't ignore the multiples. I think that's important for the privately held guys. When you see private equity guys selling, it's a pretty good time.
Okay. And how, I mean, with the amount of acquisitions that have happened over the last, whatever, 7, 8 years, I mean, the amount of privately held companies must be diminishing,
Yeah,
which would then increase the value potentially, or what's their play in it? I mean, how should they position themselves with what's going on in the marketplace?
yeah, no, I mean, scarcity is a big thing in anything, right? So whether it's a real estate transaction or a business transaction, if you are the biggest guy in your market and it's a good market and it's growing, then, you're going to do really, really well, right? I mean, if you're a $5 million company in the middle of nowhere, then the question becomes, okay, is it really that marketable or exciting to people? But if you're the biggest guy in Dallas or Orange County or, Atlanta, wherever it might be, if you're in a top 40 market and you're one of the bigger players, and especially, you have all the right metrics, which we can talk about, then yeah, that's really going to help. So, size does matter, right? So trying to, scale the business, profitability obviously matters, as much or more, because, if you got a guy doing, $20 million who's making 20% EBITDA, that's a more interesting business than a guy doing 35 that's breaking even, right? So, size matters to me. That's kind of the entry ticket. That'll get people interested. But when they look under the hood and say, okay, how much are you growing organically? What is your EBITDA margin? We want to see companies at least 12, 13%, ideally a little bit higher, fully adjusted EBITDA for all the owners, compensation and things. What's the customer retention like every year? Hard to grow a business if you're not retaining at least 90% or better. What's the enhancement penetration rate? So, those are just a couple of examples of, probably, somewhere between a dozen and 24 metrics that we look at, Robert, to say, okay, where does this business fit in terms of the attractiveness to buyers based upon those metrics? And that'll help us figure out how high up the multiple chain we can expect to go.
Yeah, that makes sense. Now, I mean, on that point, I was speaking to somebody today who recently sold their business, and they were just, I suppose, blown away by the fact that the potential buyers may only come in for a half a day or a full day. But I'm assuming they're looking at all that data, all that metrics that you're talking about first to even see if they have any interest. And if it checks most of the boxes, then I suppose the visit's just that final, conclusion, looking at some of the properties. So
Yeah. No, you're exactly right. I would tell you that some of these guys, we use the phrase analysis paralysis with the private equity field. Some guys are better than others. But yeah, they are data junkies. And so again, going back to having your house in order, having good financials and the ability to get through, a lot of that initial diligence. But yeah, they would normally, they would have signed a non-disclosure, gotten a package on the company, asked for some follow-up data, a lot of lead in before that meeting. And you're right. So the meeting really becomes confirmatory. I always tell my clients, hey, the most important thing is that we put them on the plane wanting to buy the business even more than when they got off. Mm-hmm. And it's like, they have to like you. They have to trust you. They have to believe that you're shooting them straight about your company and what your plans for, are for you and your team post closing. So yeah, it does. I call it, corporate speed dating, right? Because if you just, and they spend 2.5 to 4 hours with you, and based upon that, they're going to decide they want to buy the company or not. It seems kind of crazy, but you're right. There's a lot more going on behind the scenes.
Right. Makes sense. Any parting words for anybody who's just thinking about some type of exit? What would your parting share be?
Yeah, I mean, it's just I'm in the business. We're in the business of helping buyers or business owners, figure out what their companies are worth and how marketable they are. And we don't really do any consulting, but we can certainly, advise and say, hey, we see where you are today. It doesn't sound like you're ready to go to market. And we can, once we've met them and seen their business and their financials, Robert, then we can probably give them some good specific advice and counsel as to what they can and should be doing to not just grow their company, but grow both the value and the marketability of the business, right? For anybody that's within, 5 years of thinking that they should do something, you'd be crazy not to do it now. I mean, literally 24 years in the space. We sold more companies last year in landscape business than we've ever sold in 1 year. We got the highest prices that we've ever gotten. And so, if you're 3 to 5 years away, I'd hate to think, well, I want to grow, 1 more year, 2 more year, then I'm going to come to market. And now the valuations, interest rates are up and inflation doesn't get tamped down. And ultimately, there's going to be consolidation of some of these buyers at the top and prices will drop, right? I mean, when prices get to a point where they're so high, you've never seen them before, it's more likely they're going to come down than keep going up, right? Yeah. So, for a guy that's in it for the long term, we could get to know them and their business and give them some good advice. For guys that are anywhere near that, that hypothetical finish line, they should be looking at it now.
Okay. I love it. How do people get in touch with you, Brian, just to have a better conversation? They maybe have interest in an exit. What's the best way for them to contact you?
Yeah. So I give you my email. So it's B Corbett, which is BCORBETT at ccgadv.com, which is short for CCG Advisors. And then my direct dial is 404-575-1991. I'm on the road constantly. That should ring through to my cell phone. And if I'm not in a meeting on an airplane where I usually am, then I'll get back to them as quick as I can.
Cool. Awesome. Brian, thank you for your experience. Thank you for your share today. Really good conversation. So thank you for your time.
Yeah, no, great seeing you as always, Robert. Appreciate the opportunity. Hopefully we can be helpful.
Yeah. Thank you again.
All right, man.
Cheers.
Yep.
Hopefully that was pure dead brilliant for you today and you got some great takeaways for your business or for your personal life. This is Robert Clinkenbeard along with David Edinson. I would love to get you and your friends to join us on your journey. If you have any ideas for future speakers, or if you just want to pass this on to friends, family, other business colleagues to sign up and subscribe, that would be awesome. Anyway, thanks everyone and have a great 2022. Cheers.